Why the upgrade? Was it the drama-free conference call?
Not at all. So our thesis has always been around operating leverage on this business, and as they move to volumes and generate gross profit on the Model 3, there should be an awful lot of earnings power on this platform. That's been the bull case back to when we started working on the company in 2011. It got confused with the Solar City acquisition when we downgraded the stock. But what we heard last night is that they're targeting 15% gross margins, which should generate over $10,000 a car on the Model 3, and that's being driven in part by higher ASPs, and if they're able to deliver on that, the stock's going to go a lot higher.
So just to be clear, the second half profitability, Elon Musk has promised this how many times, but you said you think this is a reality.
Yeah, and so what we've seen historically with this company is that short-term guidance has actually been relatively accurate, and anything 2 months or 2 quarters or beyond has been difficult to trust. But they're a third of the way through the quarter here in the third quarter, so we've got 2 months left to go. We think there's a very good chance that they hit that metric, and if they do, again, we think the stock moves higher.
Robert, do you agree?
Yeah, I do. I mean, I've liked this stock for a while, and frankly, the setup has not really changed. It's just we've been waiting for volume of the Model 3 to ramp, and we're now at the point where Model 3 is ramping. The knock against Tesla is they burn a lot of cash, but as you're building a big fixed cost business, that costs a lot of money. As you ramp volume, which they're now doing, you should get a lot of positive leverage off that big fixed cost base. And so, it's basically like the time is now where the economics flip to positive. That's why they're looking for profitability in the second half. That's why we're looking for it. And then in 19 and 20, I think this company can be highly profitable and actually start generating a lot of cash. And that's really the key. It's not just profitability. It's generating cash so they can be self-funding. And I think that's what we're just on the cusp of.
How do you push back against all the bearish arguments about credit revenue drying up, right? Cancellation rates doubling, according to some other analysts. Are those things not true?
So there's a couple of things that they've done structurally on the working capital. So they get paid from their customers right away, and they get terms from their suppliers, and so they do have this positive working capital structurally embedded in the business. That's something that's playing out. Secondly, they slowed down the Capex, which we think is appropriate. They're focusing on these higher ASP vehicles, which we think can get up to about 200,000 vehicles a year, which is enough to support the stock in our view, and that's something we've written about before. And then the third element of this really is just about basic organizational discipline on spending on the OpEx side. They have all these projects. If they're slowing those projects down, we think there's a sustainable growth path. We're just happy to see that happening from the management team, and that's enough for us to get positive.
You see a fundraise is possible?
Absolutely. I think they have to raise money to grow in Europe and China. They talked about doing that through debt. We'll see what they do. I think they'd be smart to raise some equity at some point. I think they don't do it below $400, but we think they'd put that money to work very quickly if they had it.
Robert, I know Colin sees them earning as much as $19.35, I think, is in 2021.
Yeah, correct.
Where are you on that? I mean, as investors try to understand what the earnings power of the business is and what an appropriate multiple is a few years out to discount it back.
Right. So I actually have them earning already over $11 next year, and then almost $19 in 2020. Because again, I think the leverage goes from highly negative to highly positive. I put a 30 multiple on 2020 and then discount it back. And with that's where our $430 price target comes from.
Robert, Colin also mentioned how he thought it was appropriate that they were pulling back on Capex, I think not spending more. Is that prudent for a company that's supposed to be a hyper-growth company?
Well, they're still spending a lot. I think they're just finding ways to be a little bit more efficient. But it's in a way it's kind of silly to knock the company for not spending enough now when normally the knock is that they spend too much. I mean they're spending plenty. The key will be, again, once you flip to cash flow positive, you become self-funding. That's the point, because then you're spending actual money you have rather than having to keep going back to the market. And that's the key now, I think.
Colin, there are no shortage of naysayers here, of course. I mean, some of them would just say, well, the market for EV vehicles is going to explode, and there's going to be a lot more competition from high-end brands. and these numbers are not going to come to fruition as a result. What's the response to that?
I think there's a couple of things. So we're still talking about small numbers, right? I mean, 200,000 vehicles globally for the Model 3 is not a huge number in our view. And so looking at that market segment, there's still plenty of share. They picked up almost 20% share in the ultra high-end market with the Model S and Model X, and they've been able to hold ASPs higher than anyone expected. And so for us, there's a big pool of opportunity there, and they're the first one to market with this. And seeing that roll through with the Model S and Model X was pretty impressive. We think they can do something moderate in the Model 3, going down to 45,000 a vehicle or 35,000 a vehicle. We don't think that's really necessarily profitable for them, and that's been part of the bear case. We think that's still very much part of a bear case that will come to fruition is, can they get to 500,000 vehicles, and at what price point? And I think that's going to be the next level of debate on this stock, and we're looking forward to that over the next couple of years.
So the talk about aiming for 1 million in 2020, that's aspirational? I mean,
Absolutely, without question. I mean, like, Elon Musk has talked a very big game and fallen short on a lot of promises. Nobody's confused about that. He has fulfilled a fair amount of some of those promises, and that's still impressive, and that's enough for us at this point. But we still have some real trust issues around this management team and what they tell us and what they're able to deliver on and in the time frame that they deliver on. So we don't want to back away from any of those criticisms, because we think those are still valid and still very big concerns long term.
I mean, criticism is a part of this story, Robert. And David mentioned naysayers. You have big name short sellers, Jim Chanos, David Einhorn, continuing to get burned here with the stock up 10%. And yet you talk to some investors that are shorting this company, and they have more conviction than ever. They point to accounting issues. They point to the cash burn. They point to the legal issues that this company is facing and some of the accusations around engineering and accounting. Does this go away?
So I think I mean, this is the most contentious stock I've ever covered, that's for sure. So you have, but I think you have like two bear camps. There's one that is dug in and probably stays dug in, which says there's too much competition. Maybe people don't even want that many electric cars at the end of the day. But I think there's another part of the bear camp that's just basically saying, these guys can't make money, and that's why it's key. I mean, when they start making money, as we expect in the second half, and then thereafter, that whole short camp has an issue, because their whole basis is, they can't make money, and there's sort of been this, they can't make money on 100,000 cars, and every time they sell another car, they lose less money. Again, it's because they've been investing to date, and they're just really ramping the volume now.